Alrighty, well, back at it after some revisions. After my last little test of a series of trades that I went through in my prop firm challenge, I noticed there were some significant issues with the way in which I was trading, which wasn't ideal in the long term. So basically, we're back again. We've still got that same challenge undergo. We're down, I think we're down about 3% on that challenge. So we've got some work to do to get it back up, but not an issue. The system that I've got currently is being derived on numerous indicators that I've developed. It's a mechanical system. There are a few discretionary rules, but mostly it's a mechanical system. Operating pre-London and 2 hours after London opens. So yeah, I think what I'm going to do is I'm just going to do top-down analysis and just do some fundamental analysis as we come into a new week. And I think the best thing to do is to just first look at any news. Let's go to the screen here. Yeah, so we've only got an FOMC member speaking. Harker speaks later in the US session, so we don't have to worry too much about that. We've obviously seen a big move in gold recently. That gold on Friday did what was it, a 300 pip move? About a 300 pip move for sure. Look, I mean, there was a huge range to be explored above 250. It's new territory. It's all-time high sort of territory, and there haven't been major levels created there. So didn't find any resistance until about 2088, roughly around 2090. So yeah, 2089 started slowing down towards the end of the session there. I'm just going to take out my main levels here, and yeah. So going into some more information about what's been going on in the charts, we see the 10-year Treasury rate is making a little bit of a decline. So the 5-year. Anyway, so let's just go back to the charts there. It's obviously the dollar was showing significant weakness, pumped down after grabbing these highs. We saw a big move down, and gold obviously reacted a lot more strongly to that inverse correlation there, moving quite significantly. The dollar looking to make its way back up currently, creating a nice level of support down here. Yeah, I mean, we've got this big range to be filling in here. Are there any significant levels? We've kind of got these intraday levels here around 104. So we've got quite a big range to be exploring in here by the looks of things. So we could see some, retracement here in gold. It's definitely due. So the question of whether we're going to be basically grabbing highs and taking out early shorts before heading down, or we're just going to go straight down during London. So let's just take a look again. Let me just remove all of these interest points here, and we can just look at a nice clean chart. Okay, so let's just look at the monthly. We've obviously opened up a new monthly, and so let's see what the monthly has in store. Well, so the monthly obviously started, I guess, on Friday. So that big move's been taken into this monthly. We're very bullish. We've now created support around this region here, and we've just got this range. Again, this is a very small, untested range, but in terms of closes on the monthly, we've got 264 being our major resistance point so far. So we're breaking resistance there on the monthly. We've wicked down, we've retested this level, and we've continued up. So yeah, let's take a look at the weekly, see what's happening here. So yeah, we had this range for pretty much most of the previous month. We were in this range between 1985 at its very lowest to 2075. We had this nice pullback for most of Jan, and we've now pulled back up into the top part of this range. We're obviously at the beginning of the weekly, and what we have here is a nice bullish candle up. We've created a wick above, so we've kind of reinforcing this resistance here around 28. Again, you know, the likelihood of us breaking above this resistance here and pushing up, it's all things that we're going to just keep an eye out for. So yeah, on the daily we have started to make a bit of a bearish candle here, so we're going to be making a bottom wick at least. Coming in, we've got this range. Obviously this is our range to be trading in. Once we start to see support at this 2085 region here, which is showing support prior, we could, you know, a nice strong candle close in here might mean that we're going to be filling into this range. We can take a look at the lower levels to see where these intraday levels are, confirm them up. But yeah, I mean, I have no experience with all-time highs. I'm sure a lot of people don't with gold because it hasn't really done that in a long time. I'm just going to be very cautious to be trading. You know, if we start going higher, I start just kind of resting on my mental support and see what the story is from there. Yeah. So yeah, let's come down into the 4 hour and see what we got here. I'm going to bring up my levels now to see if any of them need adjusting, to see if we've got them right. So obviously we've got a resistance turned support that's happened a few times here at the 2055, 2057, and then this upper region here, we can get rid of these larger scale supports and resistances. This is all the details that we have here in terms of these new fresh levels here. So we've obviously got this little range formed at the top here, but this is not a main level here. So I'm just going to unlock that and get rid of this thing. We don't really know. That's not a confident level here. In terms of our next absolutely confident level, in terms of last time we closed below this level here, that's when we made our big retest. When we closed above here, retested that level, we then made our second push up there. So that's our significant level here. It's a 2070. So at the very least, we're looking to come back and retest 2070. The question is how we get down there. Do we want to see some candles be taking out 30-minute candle highs at least, and then making our way back down there? But yeah, as we've seen in the past, these very bullish sort of flag setups generally take some time to consolidate, and then manipulation, and then the continuation. And sometimes we get whole days of very flat trading because yeah, peeps are either just anticipating continuations or reversals and just basically just trade within the range. So we are creating a bit of a range here, as we can see. Made a bit of a support that's been respected twice here at 2080, so the nice even numbers here. At the high we got 2085, so it's about a 50 pip range that we're kind of in. And yeah, let's come down to 15 minutes, see if there's any more interesting levels here. Again, my strategy is pretty simple. It doesn't require me to really deeply understand these larger levels, although they can just give some context and some good places for me to take profit. But in terms of my entry, it's mechanical. Let's just talk about the entry strategy that I have and what my indicators will reveal to me. So Yeah, what we have here are 30-minute candles in a 1-minute chart. So these bigger squares here are showing us the 30-minute candles. If they are above a certain size, that's showing that there's the volume in the market. So, you know, I only am allowed to trade when I'm seeing red candles in my window. It just really prevents me from overtrading, make sure that there's good movement in the charts in order for me to be entering. The yellows are sizable candles, but they're not sizable bodies. So as you can see here, this candle has created top and bottom wick, but it's a sizable amount. I think this one would be about 20 pips, just about 20 pips. So those are also noteworthy candles. Again, they are more, we still need a body closure in order to trade. We obviously get sometimes in ranging markets, we'll get these tall wicky candles that are no good for us. So we do want to see some movement here. During Asia, we saw a setup happen with my strategy, which is quite simple. What we do is we got a big seller's candle here, bearish candle. We came up and we were looking for the support to be made off this candle. We then created our first 30-minute candle showing that this support is getting formed. That was where the close was. So this is, we want to basically just get our signal to enter here. And we did. We got an FEG, which is the red candle. So we can enter halfway up the FEG with the 15 pip stop. And again, when the market's very volatile like this, we really want to ensure that we've got some good headroom above this move. As you can see, that was needed here. We had a retest of that high, and again, what we want to do is, if we haven't got any major levels below, we want to be looking at EMAs or evens for take profit. Again, what would have happened here in terms of my system is the minute we get a break of structure here with another FEG confirmation, we can enter at the bottom of that FEG to load up on this trade. And so that trade would have been 36 pips plus another 13. So very simple mechanical reasons for entering. So let's just take a look here and see what happens. So here we've got a really big engulfing candle. We came down to touch this RSI overlay line. This is a hybrid line. This is a unique indicator that I haven't seen anywhere else available, that I created using the Keltner channel and RSI. So essentially it's overlaying the RSI's signal onto the chart so that we're able to see where we're getting RSI 50 bounces. You obviously set your RSI levels and lengths to what best suits the chart that you're looking at. But as you can see, when we cross this line, we have a very significant change in character. So obviously we can have market structure here. You can see that we changed character here. We created this low and then we broke it, but our indicator showed us that that occurred just the same. Coming up here, we break character here. We can see that we're getting signals as we are changing character here. Yeah, let's take a little look-see here. Anyway, this is a lot of noise. But we did get a signal here late London. We ended up getting a really big engulfing candle showing the reversal of the 15-minute 200. We then created a bounce off this RSI, which is once we've created a candle, what we're looking for is a pullback to this RSI, an FEG off it, and we enter. So we can enter down here anywhere below the lowest FEG, and obviously basically we need to make sure that our stop is below this RSI overlay level, because that will show us that there's a change of character, and so our trade is then invalidated. And of course, our first ideal take profit is a recent high. We might want to trail our stops or look for double zeros, or we want to find other major levels that we've pointed out on the 4-hour and 1 hour to be taking profits. So again, all of these other levels that we have here, we've got moving EMAs, we've got significant psychological levels, 245s, 250, moving in five series or increments. We have daily close, that was a previous day close. And so all of these levels are significant levels in which we can expect price to react off, which basically give us really good estimations and targets for price action to go towards. Let's just look at another one or two examples here. Let's find a winning trade. Let's make sure that these trades, oh, here we go. Okay, so let's just come in here. We got a really nice setup here on the 27th. So this is our window. The lighter gray area is our window. And of course, when we get our signal candle here, there you go. We've got a candle body with nice volume. We're looking for a pullback to this RSI level. So we're looking for the testing of change of character, basically, and a failed change of character. So we have this low here, and we also have this the RSI showing us that we are there basically at the tipping point between buyers and sellers taking over the market. And what we end up getting is an FEG away from that that area, and we are basically entering on the pullback of the FEG or the break of the FEG high. Ideal setups are going to be pullback, especially in slower moving markets. And so here, this is obviously a nice take profit zone, but another take profit method we have is if we get a really steep trend line, what we can do is we can draw the trend line and exit at the trend line break. Again, what are we doing? As soon as we've broken, we've got an FEG confirmation. We're then going to enter an additional loaded up trade and ride it to the top. Oh, what the fuck happened there? That was odd. So let's just keep walking through a few more examples. Go back in time and show you how this, how my strategy works. The beautiful thing about this strategy is that I have alerts and indicators for each of these conditions occurring. So it means you don't necessarily need to be by the charts all the time. Once you get the body close, then you've got more than enough time to ensure that you're going to be able to come back, find the RSI bounce and continue. So again, so here we go. We're in our second hour of our window here, which this is London open here, and this is pre-London, post-London. We get our expansion candle here. We get a pullback to the RSI. Again, this is, what is this testing here? This is testing a change of character. We're then getting an FEG away from that area. We're entering on the pullback of that FEG, or we're entering on the break of the highs. We end up breaking the highs. We get another FEG pullback. We can load it up. Our take profit here would have been this major level that we've knocked up before at 237. A losing trade here because we had a reversal candle. It showed up, and again, I mean, this is low probability setup once we've created a trend or whatever, but I guess this is me looking for another setup. What I recognize is that there are a few ways in which I can manage my risk, which is if I've entered and there's an FEG in the opposite direction straight after I've entered, it's high likely that the trade's going to fail. The other thing is that once we've started testing the RSI, we really need to look at managing our trades, especially if we get closes below that level. So we can go to break even once we've made a break of structure. But yeah, we need a very clean break in order to do that. Okay, let's look at one more example, and we're going to notice that we are coming up to the open here. That's a back test. Okay, so here we go. We get our nice confirmation bearish candles. We're looking for sells on this thing. We get up to those RSI levels. We've tapped the RSI, but we have not created a bearish FEG. Okay, seeing as we've crossed above, what we need is an FEG below the line. We're still bearish because obviously you can see here we're still making support. This is obviously a major level of resistance. We've got double zeros, we've got previous day low, and we've got a major level here. So this trade would basically be looking to trade the break of that level. Again, we've only really made one leg in this down move, and there's a lot that would make a confluence that would tend to to allow us to make a further move down. The reason is, if we were grabbing yesterday's liquidity, we would expect a change of character, continuation, price moving up, but that's not what we had. So again, if we one of our favorite take profits in terms of the most profitable is just to go to the recent lows. Sometimes the recent high or low is just not enough of a risk to reward, so we don't do it. In a situation like this, what we want to do is we can use our trend line. We've got quite a nice trend line here in this bearish move, and we can basically exit at that low there. So as long as this FEG is printing off these rejections, we can still be entering. So we can also just be trailing our stop underneath the structure here. Again, that would have also been pretty good. And obviously what we're doing is, once we've broken structure, we wait for an FEG, we can enter on the pullback, another position. So those are two positions there. As you can see, we got our reversal set up, which is basically an engulfing candle. It must be engulfing. We had a break, we retested RSI, and then we got another FEG above. So that's showing us a very clear reversal, and that would be our entry here. Entry here, stop loss below the RSI overlay level, and then we can choose highs. Again, if we've made an engulfing move here, we can tell that this is a fake move. We can at least be expecting something to go back up to the Asia highs or whatever it might be. So yeah, that's the basics of the strategy. Let's go back to this current session and see what sort of opportunities we might have in front of us. So currently we are bullish in structure. We're coming up to test the previous daily close. So we've already made a bit of a top wick on the daily. Let's just take a look at what that top wick looks like and see if we're going to be likely to come up very high. Yeah, we've made a very nice top wick on this actually. 37 pip top wick. So we might see a nice strong rejection of the daily close if the intention for the London session is to get bearish. Maybe, you know, there's a few possibilities. One is that we can induce low, come grab the sellers, and then make the real move. We can also induce long, come back and grab the buys. So there are buys and sells for me both. Obviously the buys are going to be coming up to the previous high. The sells, as we mentioned before, we've probably got sells to the 2075 level. We've got this EMA 200 over here, and we've just got a lot of room to re-chase. You know, even if we put our fib levels here, you can see 618 all the way down here. So yeah, I mean, there's a lot of room to come down and just rebalance this severe imbalance in the market. Let's also just put the 0.5, because the likelihood in a very bullish environment for us to go that far is unlikely. So the 0.5 is pretty much at this 2068 level that I've marked out. So we're not going to just make this chart too busy. Hello. Oh shit. Hello. Check. Was my mic muted? I think my mic was muted. Fuck.